Okay, so I'm excited about this session. This is Danny here, obviously, because about 2 to 3 weeks ago, Stuart, which is one of our investors, reached out by email, say, hey, I know it was very helpful for me, to hear how other people operate and think and and benefit before I get started, about anything. Why don't we do a session that I can help others as well by contributing from my experience being one of your clients. And for me, Stuart, besides the fact that we've been working together for for a good number of months now, I'm not going to say anything that he doesn't want to share, but it's been, let's just say, more than one property, investment property. This guy calls me out of almost out of nowhere. A good friend of one of our clients calls me, says, I'm interested, I want to invest, no experience, not sure what to do. What do we do next? Something like that. Something that usually, very common that we have, and then we started the process completely. But when someone, I'm so honored and speechless that you took the initiative to reach out and say, I will do something for your other clients. I will actually willing to share with something that we many times ask other to do, and they're willing to do it. It's just, I'm humble for you doing that. So I'm really appreciating that. So Stuart, why don't we start, with this introduction? Why don't we start about, you sharing a little bit about yourself, where you're from, what brought you to the point that you want to invest, and maybe to simply do it, and let's take it from there and have a conversation about investing and the whole process altogether, so we can help others maybe have a little bit more transparency or visual into the process of buying rental properties.
Yeah, excellent. Thank you, Danny, for the intro. So it's, for me, I've long been interested in investing. I've looked at different avenues for putting my money to work. I consider myself someone who really operates 5-10 years in advance. And so as I was growing up and looking at different avenues to put my money in and help it work better for me, I saw it as I have money in a bank account, in a savings account. I saw it grow at 1% per year. It was nice to be able to see it, but that was kind of the narrow vision, right? It was a limited scope. So as I started looking at how do I put these dollars to better use, I looked at the 401k as another option, right? 401k was a way to leverage dollars from work, pre-tax dollars, put that into a retirement that was going to come around at age 67, 68, and then you're fully hinged on the stock market. Right? So I looked at that and I saw, well, there's a lot of risk there. You look at 2008, 2009, and the crash that we had, and it was scary to me. It was scary to think that all this money that I'm working hard for, that I'm putting it into the stock market in hopes that it's going to grow on average of 5, 6, 7% a year, which it could, or we could have a 2008, 2009. So over the course of the last year and a half, speaking with the investor you had talked about, a good friend of mine, he mentioned that he had worked with you guys, and I had always looked at real estate as an option, as a really good investment strategy, not really knowing how to get into it. Right. So, I started talking to him, and it became, it became more real to me. Right. So, and it's something that I linked up with you guys last summer, about 10 months ago, and it's been just a tremendous experience. And, that's ultimately how I got started with SimplyDoIt.
And Stuart, if you can go back to just about around the time we got started working together, and try to kind of imagine or try to remember what were the fears, the concerns, I would say maybe there's an aspect of real estate, pure real estate aspect to it on one hand, but maybe there's like, okay, who is this company, and how do I know they're everything okay, and this guy with an accent and all of that. So maybe there's the two different unrelated buckets. They may connected, but not necessarily related buckets of concerns.
Yeah, great question. I mean, I'm of a very skeptical mindset. I'll tell you. So I look at things, and I've listened to podcasts, I've read articles, I subscribe to Bigger Pockets and different, people standing up there talking about how to get involved in real estate. And if it wasn't for, my connection with a current investor, I don't know if I would have given you guys a second look, and talking to him, and I put a lot of trust into what he said. So, the fears were the unknown. And for me, I looked at it, and I started talking to some coworkers about, hey, I'm interested in real estate. I'm looking at putting some dollars into out-of-state rentals with SimplyDoIt. And I talked through the scenarios of how money can be made and talking about the potential cash flow month in and month out. And I remember fairly clearly one of my coworkers saying, well, if it's that great, why don't more people do it? And to me, that was a big eye-opening moment. And I thought to myself, you're right. Like, why don't people do it? And then thinking more about it, same reason that I haven't done it. It's the unknown. It's the fear of, I have a large sum of money that's going into a property, and then what? Are you going to be, on the hook for those midnight calls about a broken toilet? What happens next, right? What does everything look like after the purchase of that home? And that's the big piece that kind of holds a lot of people up and held me up. So, I would say there were a lot of fears getting into this, and those initial conversations with you, and I appreciated your candor at the time, and straightforwardness about, that's one thing that stood out, is you were very straightforward about what SimplyDoIt is, how they operate, how you guys, what is your incentive to help us out, and it put my mind at complete ease.
Gotcha. Okay, that's good. Well, first of all, it's good feedback to me personally. I appreciate that. Definitely something I try to send, the message I'm trying to send. I'm glad it is being perceived properly on the other end. Otherwise, I would have to change my method. So good about that. Now, when we started, where at some point, we had maybe one or two conversations before officially getting started, and then we got started, and then we talked about which metros, and then we connected you to local team on the ground. At that point, where things were running smoothly or not, where the perceived expected experience match or just about match what actually happened, or were there a lot of big gaps in the process? Let's from the point, at least from the point of starting to look at properties and evaluating them and making offers, all the way to the point of closing. We maybe going to talk about the post-closing in a second, but just that acquisition process from searching to closing.
Yeah, and I'll tell you, one thing that really impressed me about the process was your hands-on nature. I think that, one of the concerns getting into this was, okay, I'm going to pay for this service and, pay for access to your spreadsheet and for access to the network, and then you were going to disappear, right? But that wasn't the case. We paid into it, and we signed up with the service, and getting into my first property, there was a lot of analysis on my end, a lot of unknowns that I just, I could look at the spreadsheet, but I was gonna, I could see the cash flow. I could look at the estimated ROI over 5 years and 10 years, and it looked good to a certain extent. But you may recall, you probably get this from a lot of newer investors, but I had sent over a lot of emails to you at that time and asking, what do you think about this? What do you think and why? Right? It's not what do you think, it's tell me, how does your mind work about this? And how do you analyze these rentals so I can do it better in the future?
Gotcha. Okay. That's good. That's another good point, because I think what we're trying to do is not just to tell you what to buy, but actually educate you along the way so you can become a better investor by yourself on your own merits with our support or backup. So
yeah.
That's good. That's good. Okay.
Yeah, and just to finish that up, you talked about, was the process what I expected? It absolutely was. It was very easy. I look at the real estate agents that you had set us up with, the ones that have been properly vetted and trained on the methodology of putting the spreadsheet together. They were all really buttoned up, right? I worked with some in Indianapolis, some in Dallas, Nashville. They were all aligned, all on the same page, which I thought was fantastic. You know, we're not getting different information where I have to sort through all the discrepancies and, you know, differences of style. You know, the lender that you had provided to us, you know, very knowledgeable, very helpful. I've worked with them on you know, some of my units to start. And then all the way through to the property management company, right? So these are all the pieces that, quite frankly, terrified me getting into real estate investing is, you know, you can make the purchase, but then what next, right? Are the real estate agents in line with what you're looking to do? Is the lender in line? Is the property management company in line? And you know, how do I know it's a good property management company, right? And I know that you've done the legwork to make sure that they are, you know, in sync and doing what, you know, the investors are ultimately looking for.
Perfect, perfect. That's a good point. Good. Now, once you closed, post-closing, you know, there's a period of vacancy and a period of preparation and a period of patience and nervousness or stress, when especially on the first property. Do you feel that process was done? Again, things were I'm trying to see, you know, I like truthfulness. I like to be open about the information. And the last thing I want to pretend is like, oh, this is perfect, no problems, no issue, you know, like smooth sail from start to finish. You know, sometimes it is, sometimes it isn't. We're definitely trying to make it, you know, always is, but that's you, the people. So I'm just trying to see if there, throughout the process of acquiring or post-purchase, post-closing, were there points or things that could have worked better, or, you know, could have done a little bit better on our end, on the local team's end, that, you know, or you could say, listen, it took a little bit, you know, extra time, it took a little bit extra money, but it's not a big deal, but, you know, it's just, you know, the way it is, you know, and that's okay too, to say, listen, everything worked okay, but you know, I wish this would have done better, right? Like more of a wish than a pure necessity or a stress point, or elimination of a stress point.
Yeah, and I think it's a great question. You know, again, I think the process is great. There were some things in the first few units that, you know, I did have some questions about. You know, it's a standard process of buying a home, whereas, you know, there's different things that you're required to pay for in terms of, you know, appraisal fees, and I think Dallas has, you know, specific fees you have to pay as well. Just things that I felt like I was getting hit with every week or every other week, and thinking, wow, I'm on the hook for this as well, and that too. Wow, you know, now we're at $1,000. I haven't even gotten to the closing costs yet. So, you know, there are things like that I feel like I was a little bit unprepared for. But, you know, the way I thought about it was, you know, it's a long-term strategy, right? You can't get bogged down in thinking, you know, oh my God, I have to pay another $500 appraisal fee. You know, we're thinking about, this is a house that, you know, is worth, call it $125,000, $150,000 that I'm soon going to be controlling, right? So it was a change of mentality for me. So I would say, you know, that's one aspect where, you know, there were some gaps in my part in terms of understanding, being new to the investment space. You know, and then finally, there, you know, recent property in Indianapolis. I mean, I had sent you a couple notes about this, but, you know, there have been some findings post closing where, you know, I had insurance canceled because they found some concerns from the property on the outside, overgrown trees and damaged, you know, stairs in the entryway and things like this that, you know, again, totaled to me was a sizable amount. But again, this is all just part of the learning experience, and it's not, you know, it's not to say it's necessarily a negative. It's just, you know, it required a change of mindset, change of mentality.
Gotcha. I love it. I think that's very, very, very important point, what you just said about the changing mindset and mentality, because I see a lot of people from the, you know, the Silicon Valley, you know, very analytical, very tech-oriented, and when things don't follow exactly a certain pattern, they're like, why is this? I mean, how come it's costing me a few $100s more? I should be told, and like, you know, change your mindset a little bit. You know, this is not high tech. This is, you know, a lot of moving parts, a big puzzle. You know, each puzzle is actually, each piece of the puzzle has its own pieces of the puzzle. So just that's a great thing to say, the mindset, you know, and the change of mindset. It's good. if I'm either a new investor or someone who is maybe not new but not familiar with SimplyDoIt, are there any suggestions you can give me as to how to overcome those obstacles going into real estate, you know, or maybe, you know, as a secondary working with SimplyDoIt, you know, so I can, you know, kind of jump over the hurdle. I mean, there's always a hurdle for beginners and, you know, new in the sense that, you know, don't know us yet.
Yeah. Yeah. I mean, I would say just do it. I mean, that's part of it. I mean, there's that saying about analysis paralysis, and, you know, people that are interested in something and they crunch the numbers for years and years and don't end up doing it because it's just never quite right for them.
Right.
What they're looking for. So I say, I mean, if it's something that you're interested in, I mean, I think that from my perspective, it was surprising to me how easy it was. You know, it's right there in the name, SimplyDoIt. But it was very easy. The process was great, and it really gets you thinking about, you know, what next. You buy that property, you think about what next, you know, and you see every month you have that rent check come in, and you think, wow, this really works. This is something that, you know, that I can start to count on over the long term, right? And then you layer in a couple more properties and a couple more, and it starts to snowball.
I love it. I agree. Yeah, I think I've learned that with the food comes the appetite.
Yeah.
Yeah, and
I
also
would say don't listen to people. You know, don't listen to the detractors. And
perfect.
You know, I talked to family members that said, you know, it's not stable, it's not secure. You know, stick with 401k, stick with you know these types of things that are traditionally going to get you 4 or 5%. But again, that's that fear that people have to overcome. You know, I'm here to say I felt the fear, but I kept pushing forward and, you know, made that leap, and couldn't be more thrilled.
So I got to tell you two things. This is a good point, because I found that a lot of those advisors, they don't do real estate.
No, they don't.
They just copy someone else's, you know, they heard someone and they're just, you know, copy pasting. So it's always you know, and by the way, I've heard those naysayers since I got started over, 16 years ago. You know, they were there, people who don't do real estate or don't invest, and they're giving me pieces of advice. The young, you know, 25, 26-year-old who's thinking about it. It always blows my mind how we give them so much weight, especially when we realize they don't actually do real estate, but they're very good with giving advices. That's good. That's good piece of advice. And I think that you know, anyone who's you know, I like it. It just, you know, I still to this day when I buy houses, right? Still, so many years I've been doing it. Fear is still there. It's never gone. That's, you know, fear, risk, same thing. So, you know, I can't take the fear out of investing in my end after so many years of, you know, for me, it's just a healthy safety mechanism. So it's like, okay, have you done your homework? Have you done everything? Listen to the fear, you know, embrace it, but don't let it overtake your over you and paralyze you. Yeah.
Well, what's interesting to me, Danny, is you know, again, talking to the people who said, you know, there's a lot of risk involved with real estate, and there's, you know, it's not the most secure way to move forward with investments. But I think to myself, you know, starting off this call, we talked about the 2008, 2009. That to me signals a risky endeavor. You know, think about that. I'm putting my entire future into, you know, the stock market, hoping it's going to return for me, right? And hoping that when it's time for me to draw from it, that there's not a big dip like there was a few years ago, right? With real estate, I know that it's a tangible asset. It's something that, you know, consumers will always be renting. They'll always be looking to rent. And there's a lot of different ways to make money from real estate, right? And that's the reality of it. You know, there's 4 or 5 different ways, and none of that is really hinging on, except for the appreciation piece, it's really hinging on, you know, a good, strong, you know, market. So
got it. Good. Agreed. Good. I think this is excellent. Stuart, I don't have any more questions. Is there anything else you'd like to add that we didn't talk about that I missed asking? worth mentioning?
Yeah, I appreciate you having me on. I think, I love the opportunity to come on and just, speak about the experience because, for me, having taken in a lot of education and a lot of learning from podcasts and reading, it's easy to get overwhelmed by it, and it's easy to go off in different directions. And, I've had, my wife can attest, I talked about multifamily investments one week, and then I talked about the BRRRR method the other week, and then now single family and duplexes and fourplexes. And, part of it is, find an investment strategy that you're comfortable with, and one that, especially if you're new, that makes it very easy to get into, and see how the experience is, right? See if you like it, buy a few units and see, is that the area you want to be, right? You have to give it that shot. And that's what I did. And, again, it's been a great process. You have a fantastic network of people working under you. And I just, I couldn't be more pleased with it all.
Very good. And worth mentioning, I think the first one was being done. Closing and birth took place about the same time, if I recall correctly.
That's right. Yeah, within the month. Within
a month. Yeah, I remember. So the birth of your firstborn, and just about, I guess you got an amazing birth present.
That's right. Yeah, there's a lot of champagne to go around back in that time.
That's right. Stuart, I really appreciate you taking the time and sharing and the information and taking the initiative. It's amazing. I like to say that not only that I am very thankful about you initiating this. Working with you was a truly pleasure, because I don't mind as many questions as you have when I know someone is actually executing. So I like that. I see that, obviously multiple times. I love the fact that even when you proceeded beyond your first property, you never stopped, kind of asking questions and verifying and keeping me involved, because for me it's important to stay there and support that those additional purchases, and not just for someone to get the feel that after one property they know all. I don't know all. I'm still learning, so I really am thankful for you keeping me in the loop, although it's our network and our services and not just kind of going on your own every time. So keep doing that, please. I want to be there. I want to be involved. And the last thing I can say is I'm going to wish something for myself. What I want to wish for myself is clients more like you, because it's just been a pleasure working with you all along. And I say it's not for granted, because I can't say that I work with bad people, but once in a while you get someone who's driving you nuts or someone who's talk, and it takes them a year to execute. With you, it was about doing an execution and focus and moving to the next phase, and very, very relevant questions, and always pleasant conversations. I just wish for myself more people like yourself. So that will be my wish for myself.
Kind words, Danny. It's been a pleasure.
Excellent. Thank you very much, Stuart. You have a terrific rest of your day.
You as well. Bye-bye.
Bye-bye.